I didn't sell, and I lost a lot of money because I didn't sell at the top. Now I understand the cyclical nature of Bitcoin.
Right.
But I'm very split in my heart of when it goes up, and I understand it will probably go back down a little bit. Should I sell some of it? Should I sell all of it? Should I sell none of it because of my morals? Like, what advice would you give me there? Because now a lot of us who have been in this game more than 4 years, we understand the cyclical nature of Bitcoin.
Let's bring in Maciej Czajkowski. You may know him as Pinboard on the internet. Maciej, good morning. Lay out your bear case for cryptos for our audience.
My bear case is that it's a giant pyramid scheme.
Here to discuss the volatility, Token Metrics founder and CEO Ian Balina. Ian, thanks for joining us today.
Very good afternoon to you both. Tom Lee, I'll come to you first of all. What do you make of today's bounce and the intraday buying following that massive gut check this morning? I guess whether we talk about equities or Bitcoin, your pick.
No, here's what I think. I think you sell the Bitcoin. How are you going to feel if you sell it at 27,000 and then you wake up one morning and it goes to 82,000?
Well,
and then it goes to 167,000 when it goes to 1 million. And when it goes to 1 million, are you going to be bragging that you bought it at 0.019 million and you sold it at 0.2022 million? Like, aren't you going to feel freaking stupid?
Thank you for having me.
So let's start. I realize there's more to cryptocurrency than just Bitcoin, but let's start with Bitcoin. The fact that you do have this limited supply, hearing a lot about the fact that we're in this price discovery stage for the asset class as well. Is the way to think about this, especially if you are a retail investor or somebody who's new to trading in general and this has caught your eye, you've gotten involved, the way to think about this, that at least with Bitcoin specifically, volatility is inherent to the product?
Bitcoin is dipping, and it's dipping hard, and it's scary, I know.
And people are getting sucked into it. Unfortunately, it's a pyramid scheme that has a core of true believers and a core of people who are really fascinated by technology.
Yes, absolutely. So cryptocurrencies, one of the beauties of them is that it's very volatile. But as a result of that, there's lots of upside. Lots of retail investors and traders are joining the space because of the huge gains, whether in Bitcoin, whether in Ethereum, whether in Dogecoin or meme coins. But at the end of the day, they should zoom out and have a big picture view. Because right now, Bitcoin and cryptocurrencies are building the future of finance, the future of open money. And if they have that big picture, then they should hodl and think long term.
I think the way you use Bitcoin is as a long-term savings account. So if you want to have a portion of your money that you like to gamble with and speculate with and bet on things you're passionate about, take that part of your money and invest it in new ventures or invest it in cool things. Take another portion of your money that you want to save for the next 20 years or 30 years, like, you know, and put that in Bitcoin and just leave it there and don't get caught up in all the back and forth because, you know, it used to be people.
MicroStrategy speculate at all, like on the cyclical nature of it, or it's in there permanently?
I have bought either through entities, through MicroStrategy or through entities I control, 88,000 Bitcoin. I never sold one Satoshi.
It may be necessary to call out certain aspects of it, but calling it a pyramid scheme is too simplistic, no, to even call the technology behind it. 25 years ago, critics said that the internet would amount to nothing. Some of the narrative at the time, it's decentralized, so you can't trust it. There will never be any internet payments, too many technical problems. It sounds a lot of what I'm hearing from you and others around the bear case for cryptos at this point in time. Is it possible that we're just in the very, very early innings and this is a platform, not a pyramid scheme or even a store of value? It's more than that.
Yes.
This year, after March, you've got insurance companies, corporations, treasuries, institutional investors. They're buying this stuff instead of gold. They're buying it to hold it for a decade as an inflation hedge. They're not using leverage. They're not using offshore exchanges. They're not speculators. Their mindset is, I'm going to hold it for 10 years. What can I buy that's better? If I sell it, I'm going to generate a tax bill and I'm going to buy something inferior. So they're not going to sell it. And that means you're not going to see, I think, that kind of volatility.
So you think? I mean, I've heard you talk about you think the volatility is going to be tamped down a little bit in this cycle.
I think it already is. I mean, if you look at it, the volatility of Bitcoin is decreasing since March, and the volatility of everything else is increasing. Let me give you one more metaphor, Ben.
Yes.
I love
metaphors.
LeBron James started playing basketball at age 9.
Yes. And
by age 18, all the scouts knew this is the best high school basketball player in the world, and he's probably one of the best professional basketball players in the world. At age 13, he probably punched somebody on the court, and he might have missed a game at 15 because he smoked some weed. And he's a little bit volatile here and there because he's at age 11. Maybe he got pissed off at someone. And you're like, oh, LeBron James is volatile. When's he going to blow up again? From age 19 to age 29, LeBron James crushed everybody and everything in his way. And you probably should have signed him. Because just because someone's first 10 years, they were promising and volatile, doesn't mean that the next 10 years of the athlete is going to be an exact repeat.
Yeah.
It isn't, man. When you're 25-year-old, you don't act like when you were 13 years old. Right. And Bitcoin is moving from its first 10 years to its next 10 years. And it's a much more mature asset. It's not, you can't look backwards and say, I'm sure it'll be like it used to be. You have to reason from first principles. And when I tell you, I just bought 1.1 billion of it and I intend to hold it forever. Yeah. Right? Right. Did anybody in 2017 tell you that when you were buying Bitcoin?
No. I mean, so DeFi is a huge market. Decentralized finance is, in my opinion, building the new internet. It's building open finance. What does that mean? If we go back and look at the dot-com era, we had big companies like Google, Yahoo, Amazon, eBay. This was the first generation, the first wave of the internet. Then we had Web 2. This was basically social media, connecting people on the internet. We had YouTube, Twitter, Facebook, and now we have Web 3, taking those online communities and giving them entire ecosystem and currency to transact and be able to exchange value between two people with trust. So we view cryptocurrencies and this entire space as not just open finance, but as the next evolution of the internet.
Okay.
The people that I know, the wealthiest families in the world, they're like these New York City families where you ask them, where's your money come from? And they're like, oh, my great-grandfather, he bought like 4 city blocks in Manhattan. And they're like, did you ever sell that? It's like, no, we still own it. They own it for 100 years.
Yes.
If you have really good property, like if you owned a block on Central Park in Manhattan, do you think there's any year in the last 100 years it would have been a good idea to sell it, pay capital gains tax, and buy something else?
Only 2020.
What they do, only this year maybe. So what they do is they hold it for 100 years, and as people print more dollars, the value of the property goes up at the rate that the Federal Reserve prints dollars, and then every 5 years they refinance it and they borrow more money against it. So if you borrow against an asset that's appreciating in value, you don't pay capital gains tax, and then the money you borrow you can live off of, and you don't pay income tax on it. So if you have the world's perfect, if you own a city block in cyberspace that's good for the next 100 years, that's Bitcoin, right? A Bitcoin is a city block in cyberspace. If you own that, and if I told you 1 billion people are coming to that city and they're all going to need to buy their own block, and you own the right property, it's the Manhattan of cyberspace. Why don't you just keep it in the family for 100 years, and the next time you feel you need some money, well, you go borrow money against your Bitcoin. There's no capital gains tax, there's no income tax. If Bitcoin was going up 100% a year, you're getting paid 100% tax-free interest, and you're going to pay 5% interest to borrow the money. It's a 95% difference, right? So you don't want to sell because you get tagged for the taxes, and then you stop generating the yield on the property. Really wealthy families, they just keep the assets forever and they just finance them. That's what they do.
Oh.